this afternoon's panel, we're going to tap the brains of these wonderful experts and talk about opportunities and challenges. We've touched on some of these concepts all through the day, but this is our chance to dig a little deeper and particularly to think about what a CDE goes through when it looks at projects, what an investor goes through when it looks at CDEs, and how these relationships actually work in a practical sense by talking about what their issues, concerns, and risks are. And I am absolutely delighted to share this panel with these really nice people. We've spent a few hours on the phone working together to think about how we were going to do this and what we were going to do, and it was actually fun. Can you imagine? It was fun.
Work can be fun.
It can be fun. So, and Julia Nelmark actually talks about work being fun because she's doing something she cares about. She's the director of New Markets Tax Credit Financing for Midwest Minnesota Community Development Corporation, MMCDC, which is in Detroit Lakes, Minnesota. She manages all elements of the company's New Markets program, so she is the right expert for this conversation. And MMCDC has provided benefits to more than 90 projects. The New Markets loans have ranged from $225,000 to $20 million. And I don't know about you, but I thought her loan pool conversation earlier today was really helpful. She spent several years in accounting and finance for Amoco and in some of its operating sectors in Chicago. And she's worked in planning and financial management for 2 other for-profit manufacturing companies before she got snagged into community development. She spent 6 years on the board of directors of the Opportunity Finance Network, was board treasurer and audit committee chair part of that time. And she previously served on the New Markets Tax Credit Coalition, as well as the executive committee for the New Markets Tax Credit Coalition. She holds an accounting degree from Benedictine University in Illinois and an MBA in Finance, Strategy, and Marketing from Kellogg Graduate School of Management at Northwestern University. Ben Alderton is he's been with U.S. Bank CDC since 2012, and is a New Markets Tax Credit and Historic Tax Credit project manager responsible for structuring, underwriting, and closing in both tax credit areas. He's served as a New Markets and asset manager within the tax credit group and managing a complex portfolio of investments, including state U.S. Bank CDE transactions. Prior to joining U.S. Bank CDC, Ben practiced law in Connecticut with an emphasis in commercial and litigation and municipal law. He's a member of the Douglas County, Colorado Historic Preservation Board, holds a JD from the University of Kentucky, and an MS in Animal Science from the University of Wyoming, and a BS in Agribusiness from the Oklahoma Panhandle University. Andy McMillan is a certified economic developer and brings experience in economic development, strategic planning, implementation, project management, public administration, and development finance to many initiatives at the Cherokee Nation businesses. He's worked on a wide variety of projects, including industry recruitment, retention, real estate development, reuse, renewable energy, infrastructure, and special projects like enterprise business continuity and business process improvement. Andy has a bachelor's degree in political science from Texas Christian and a master's degree in public administration from the University of Oklahoma. He's also a graduate of the Economic Development Institute at the University of Oklahoma and is certified as an economic development finance professional. And since everybody else sitting in this chair was so kind to do it, I will tell you, mine is 503-341-5380.
Can you repeat that?
503-341-5380.
I think that I have that in your email, actually.
Okay. So our discussion today, we're going to focus on the investor perspective on issues related to the borrower, the CDE, stakeholders' involvement, and community support, decision-making and enforcement of obligations. And we're going to try to refine these concepts to be specifically relevant to the work that you do in Indian country. And Julia, would you like to start us talking about securing the loan?
Sure.
And Ben is also going to help us with this. We want to make this a discussion, so you'll see all of us kind of going around these topics, but particularly this late in the day, we invite you to just raise your hand and join in the conversation with us. Ben and Julia?
Thank you. Can you hear me in the back okay? Yes, great. Okay, thanks. So someone referenced earlier, asked if there is an issue with financing projects on trust land with new markets, and similar to any bank loans that you might try to acquire, new markets, we set them up, we structure them as loans. We have some special terms and things, but it is set up like a loan with the attorneys and such, so we'll have similar issues. First, as I'm sure you all know, tribes cannot provide a mortgage on trust land, and real estate loans are generally the easiest to do new markets lending with. So we have used a lease assignment and a leasehold improvement mortgage to acquire a finance interest in real estate-based native projects. Now, that will raise an issue in terms of collateral, and I believe we talk about collateral on a different slide, so I won't go into that. But not having the full real estate value included can lead to other issues. But so the leasehold improvement mortgage or a UCC lien on equipment or other personal property are the basic ways to secure a new markets loan in Indian country. And if we're looking at land that is not trust property, sometimes we go that route anyway for other purposes. So that's not necessarily just a tool used for Indian land. In terms of enforcing the obligation, there was reference, I think, from Dakota earlier about the sovereign immunity. We certainly respect that, and we're not trying to reduce or take away any rights there. The language that we seek to get into a loan agreement for collateral purposes is a partial waiver of sovereign immunity, meaning if there is a problem, which we hope to prevent ever happening, but if we have a problem where we have to take some collection action on a loan, we're looking to be able to take action on just that transaction in state or federal court, as the case may be, where the law is more standardized across the states and what have you, and it's a bit easier to take those actions.
Andy, you want to talk a little bit about your experience with that?
Certainly, yeah.
Yes.
Wait for a microphone.
And I'm not a legal expert. This is Wayne Ducheneau from the Native Governance Center. You actually can mortgage land. So 1956, 25 U.S.C. Section 43 was passed to encourage individual Indian landowners to utilize commercial credit to the maximum extent possible. So it's in the law that you can mortgage land in 25 U.S.C. It's just banks don't view it and see it as they still seem too complicated, but it's in federal law that you can mortgage land.
But are you talking about individuals versus
Individual and tribes in some instances.
Oh,
Yeah, in some
tribal
instances
land
you
can be? Okay.
If you'll look, okay, if you will look down about, if you'll go down about 3 different sections of that law, it also talks about the attitude of federal law in regards to right-of-way, easement, and vacation. So the law is that with individual Indian land, you can take what's called a mitigated assignment. It has to be what they call an assignment on the demise premise, and you understand demise premise being in real estate. Okay, that has to be subject to a independent and certified survey. Okay, you can do that with individual Indian real property, but you cannot do that with tribal property without the consent of federal government. And it becomes very, very difficult because in most cases they will want to have a, what am I talking about in the survey now? You know, there's a word for the survey. It's more than just a survey, but it's a legal
Alta
term.
survey I heard. Alta?
No, it's even more than that.
Okay, so we went through that recently with NAB on a Red Lake deal. We were just seeking BIA approval of a leasehold improvement mortgage, and that was difficult enough to get. I understand there's some nuances in the law, but I think practically speaking, tribes don't typically provide mortgages on trust land.
Most tribal
Is that a fair
constitutions will
statement?
not allow you to take that kind of an encumbrance on real property in the first place.
Right.
What I was trying to clarify the point is that I don't think it's, I think to say that you can't mortgage
Okay.
is not a correct statement.
Okay. Thank you for the clarification.
fair?
Yeah, thank
Yeah,
you.
if I could jump in on this just a little bit as well. I think one of the overarching themes that I think we've seen today is that the new market tax credit financing is actually meant to be very flexible. And so we as an investor understand that. The CDEs understand that. So there's a lot of flexibility that's involved. And there was a question earlier about what type of projects can we do? What type of project fits the bill? As long as it's not on one of those sin businesses in there, that project probably fits the bill. And so it goes the same way with the leasehold mortgage. It goes the same way with the collateral. Because of the flexibility of the New Markets program, it allows lenders to be more flexible in terms of their collateral arrangement and those kinds of things than you normally would be as a traditional lender lending directly to the project, underwriting the cash flow.
A nuance to that is that the lawyers have to give an opinion that the QLICI constitutes true debt. And some of the IRS tests for what true debt is also take a look at the enforceability of the loan, the likelihood of being repaid. So something like a leasehold mortgage is something the lawyers are familiar with and they'll be comfortable with. Things that are more nuanced or that, for instance, might require tribal consent to exercise creditors' remedies, they would be less comfortable with, and it might be difficult to get a true debt opinion. Yes? He has a microphone there for you.
One thing that we used in the past, and this has to do more with gaming than a lot of the items in gaming is not allowed. Got it, there we go.
There. Thank you.
And it has to do with what Wayne was talking about here, and I think it's something that is usable in other areas other than just gaming. But I'll give you for instance, a Section 17 corporation has limitations on the enforcement or the supervisory requirements of a leasehold interest on trust property. So what we did is we created, you mentioned just a minute ago, a leasehold and a leasehold assignment. We created a lease from the Tribe A, to the Section 17 corporation. There's a demise premise for that lease, and we were able to use, again, that leasehold interest as assignment, and I think that would be a real practical solution to some of the things you're doing with MNTC also.
Yes, thank you, Ken, it is.
Still have to go through the solicitor's office.
Yep.
That's exactly what we cut our teeth on with our Indian Health Service facility, and it can be problematic. Again, it comes back to the people and the relationships and bird dogging that through the Bureau of Indian Affairs and the solicitor's office. And so it really will come back to tribal leadership and the rapport that they have built with the Bureau of Indian Affairs. It absolutely can be done. It can be lengthy if you allow it to be lengthy. You got to bird dog it.
Very true. I think the BIA legal department's backlog is some 2 to 4 months, and theoretically they are prioritizing mortgages and leases for mortgages, but our view of prioritization perhaps is different than theirs. So yes, bird dogging is quite important. Ben, were you going to add some comments on that slide?
Yeah, just a little bit on the limited waiver of sovereign immunity.
Great.
Just briefly on that. You know, it is turned on. I'm just not that loud of a person. I can try though. We participated as a CDE rather than as the Qualic B on the project, but we still had to offer limited waiver of sovereign immunity. So if you're thinking about it from different positions in that transaction, as a CDE, there's still an enforceability question about obligations that the CDE incurs, and so we needed to be able to offer that limited waiver as it pertained to that role, just like a borrower would. So typically, I don't know in each of your organizations how quickly that process takes place. It's not quick in our organization. The tribal council has to meet, and that takes some committee meetings. You have to introduce things in a certain order, and they're just a little bit skeptical of waivers of sovereign immunity unless there's a really good reason to do so, rightfully so. We actually, as we were getting into this program, took the step of asking our tribal council to pass a piece of legislation that gave the chief discretion to issue a waiver of sovereign immunity only as it pertained to our new markets transactions. So that would speed the process up to where we could actually work with our investor partners, to where we could work with projects and be, once a project got traction, we wouldn't be beholden to that tribal council schedule for whenever that next scheduled meeting was. We could actually just work with the chief's office. But it took a lot of pre-gaming to get the council comfortable with that piece of legislation and the chief comfortable with the idea that he could wield the pen on that in just that limited circumstance. I think if you're thinking about it, plan ahead.
Good point.
Hey, the scope of collateral in new markets is just like the scope of collateral in any kind of commercial lending, though with some nuances. Some kinds of equipment, for instance, are a little more difficult to finance with new markets because they're typically a shorter term financing than the 7-year term. But I'd love to have our panel talk about collateral they've seen in tribal deals and how that might be different.
What's this one?
We were going to have all three of you talk about it.
Okay. Who wants to go
No,
first?
jump in, please.
I'll jump in. We've seen probably all of these in different ways, shape, or form. I think, again, it's the flexibility of the program, and there's got to be creativity around it and some just thinking ahead. And I think as long as you understand what you can and you can't do, and you're working with your counsel very closely, I can't emphasize enough how important it is to have, you need to have your counsel that you trust and can help you with issues related to your sovereign immunity and your specific constitutions or whatever your governing documents are. But you also need to have a good advisor there that can help you structure the transaction in the new markets world. And if you have that person should have a great deal of creativity around that. And that can be your attorney, it can be a consultant, it can be anything along those lines. And that can help you just think through some of these issues. And the other thing is that when it comes to closing transactions, I've been on a lot of calls where we were just brainstorming ideas with counsel and just trying to figure out how do we get past this issue. And there's creative ways around most all these issues, and we just have to think about what we can do to get to the end game that we're all trying to get to. And we're really just trying to ensure that we get the money deployed to good projects. And how do we do that?
Yeah, in our experience, it was these were all real estate transactions, so we were looking at lease assignments in a couple of those cases. you have to get comfortable with the value of that. And the practical application of that may or may not be something you want to dwell on too much. How good are you going to be at operating a community arts center or a telecommunications network in rural Alaska? But those do have value, and so as long as you can get comfortable with that, you may need to be able to explain yourself a bit as to what you think the relative risks are of you having to call on that collateral.
Right. We did, on the broadband deal we recently closed in Wyoming, rather than looking at real estate because it covers so much ground, we took an assignment from the tribe of the rights to the underlying broadband fiber backbone and use of that fiber. And so while MMCDC certainly isn't in the business of using fiber, we discussed with some industry people and determined that there was adequate value and businesses out there who could use it, that we could assign that or use it in conjunction with another entity should that need arise. And so we got comfortable with that. On the length of lease, that's a good point. I've been told in varying situations, tribal bylaws may limit the length of any lease. Some can be quite long to tribal members. Some can be limited to, say, 20 years, we saw on something recently. And so cities do the same thing. And so we've structured into New Markets deals, if the intent to renew a lease is in there, we can include that in the value. So sometimes the valuation of the collateral requires 40 years versus 20 years. And so then we have to have some way to document an assumption that the renewal of that lease will be there, will be available, and then we can stretch out the assumed repayment as one of the tests for that true debt, the capability of the borrower to repay that loan over an extended time period. On the value gap for the appraisal, there is both the rural area gap in value that we see in native and non-native properties, and then also the value gap where we're looking at leased land without that real estate ownership being part of the collateral. And then the third level, if there's discomfort with the sophistication or ability of the tribal entity to operate whatever is going there. So an appraisal looks at three levels of valuation: replacement cost, comparable sales, and then income approach. And it's usually that income approach that lenders look to. And so if there isn't adequate documentation of the ability of the native business to achieve the necessary income levels, income stream for that business, then that also can depress the collateral value. So we have to look at the whole range of those things in assessing the valuation, and the attorneys certainly are going to need that valuation for their tax opinion and the true debt documentation.
Something else that I've seen done, the Navajo Nation had a project that they wanted to accomplish, but they had a lot of difficulty with the ability to do a leasehold mortgage. And so one alternative was that there was a corporation, utility authority, that had a revenue stream that could be pledged for the project. Mm-hmm. So sometimes looking to some other tribal business that doesn't have the same issues, a separately incorporated entity that perhaps has some other asset or a revenue stream that can be pledged, can address a problem of an undervalued collateral.
Sure. We also used, while gaming isn't an eligible New Markets borrower, gaming streams can be pledged as part of a secured guarantee. So I think in White Earth, we used for the New Spirit Center a portion of the tribe's gaming revenues that have a history of being transferred to the tribe for the programs that the tribe carries out. And so that was exactly how that was used to support the collateral level.
So, Andy, you want to talk about underwriting?
Sure. So for our perspective on, and I want to be clear, I'm the least qualified guy up here. We were just they were looking for somebody to add to a panel. Our experience as a CDE, to be perfectly transparent, is aging a little bit. But we did do a number of projects, and so we did a lot of underwriting of various projects along the way to see, and wound up doing 4 different transactions. The complexity piece of that, I think clearly we have some discussion about what can and can't be done with assets that are on trust land. We chose to start with a position that things that we were going to do with another tribal entity we were going to give them the benefit of the doubt regardless. So we weren't looking for a reason to say no. We were looking for a lot of reasons to say that we could say yes. So we started with an understanding that there were going to be some hiccups along the way. We wanted to be really careful that we didn't assume everyone had the same level of acumen and sophistication. And so you, as a CDE, you really have to bring projects along. And we did that by accessing really good investor partners. So we did a number of transactions. 3 of our transactions are with U.S. Bank, so we were able to rely on U.S. Bank for some expertise. We went out and made sure that we had attained good accounting and structuring help, folks that were on call for us to be able to bring to the table with that CDE, or as a CDE, bring to a project and help them understand what we needed to see. Sometimes we couldn't explain it quite as clearly as, and you need some extra help to get that done, somebody with some experience. We definitely needed some legal advice that we occasionally just went ahead and paid for to help our borrowers get to a point where they could understand what a transaction was going to look like. Most of the projects had no previous experience with some financial instrument like this. So we spent a lot of time and energy educating ourselves and trying to educate our borrowers as well. And as a result, you build relationships with projects as you go along. And that I think Dakota has said it several times. It really is about underwriting people, and I think that's the right way to think about it. Do you have your ducks in a row? Can I trust that what you're presenting to me is real? That the numbers that you're giving me are real? That you know them and that I can verify them? But also, can we do business together? Because we're going to be in business together for 7 years. At the very least, the project is going to interact with the CDE for that long. So, are you somebody, or are you an organization that I want to be in business with for that long? I think those relationships matter. Obviously, when you're making loans, you've got hard and fast criteria that you need to look at for whether or not you're solvent, if your projections are real, the collateral's real, all of those underwriting criteria. But those are going to have to be there by the nature of the fact that these are heavily documented transactions, and it's that personal piece that I think lays over the top of this that might be slightly different. I don't think you'd find any different as a community banker, perhaps, having that relationship with the folks that are your borrowers. I think maybe from sort of big institutional finance, that might be a different twist on on what the relationship looks like. Ben might be able to speak to that a little differently, but in our experience, really, it was building that relationship to understand who are these people that we're going to get into business with.
You commented about the projects not understanding and needing to be brought along, and I've had experience where the project folks were actually kind of offended by the investor and the CDE because the investor and the CDE knew each other. They'd done a dozen or more transactions together before. They were kind of talking in code. And the project folks felt like they were sitting in the corner observing people talking about their project in a way that excluded them because the New Markets program was fairly arcane and had its own language, and these folks shorthanded things because they'd worked together so many times. And I think having some sensitivity to that, particularly in working with native businesses who are have had generations of experience of being taken advantage of or left in the corner while other people worked on things for them. I think that's a particularly important issue in structuring transactions.
I would echo that and say that as I'm a project manager and I'm closing deals, I close deals all over the country with different levels of sophistication. But if you're a it doesn't matter if you're a tribal entity or not, just to take a regular nonprofit entity that's in the healthcare business, they don't understand finance. I recognize that. And when I do get on the phone and I'm closing deals with CDEs that I've had a lot of relationship with, it's very easy to have that happen back and forth. It's just important that you step up and ask questions. And when Qualic Bs ask me questions, I represent the investor, but I also want you to understand the program. I want you to understand what's being said. And so I find it very beneficial to try to make people understand that ask those questions. Ask them of your counsel. Ask me. I don't mind. I'm happy to explain. I love talking about new markets. I understand new markets just because I work in that business all the time. And so pick my brain. Use that to better yourself and to make sure you understand exactly what you're getting into. And when I was on the asset management side, after the deal's closed, I had the same type of questions. Now I've closed this transaction. What the heck do I do with it? I've got 7 years. How do I manage it? Rely on your CDE partner. If you've partnered with a CDE that's a strong CDE, they're more than willing to answer those questions. Your investor is more than willing to help answer questions as well, especially in situations where I was managing USB CDE investments, which is our allocation. And so I encourage you to just ask questions of your CDEs. If you've partnered with a good CDE, they will help you.
And to that point, your incentives are aligned. Your incentives are to make that deal work. If you've done the underwriting, if you've done, the investor has got skin in the game, the CDE has skin in the game. The project needs to succeed. And so we're all in alignment that your project, if you're on the Qualic B side, we want to see it succeed. They're not looking for gotchas. The CDFI fund, the regulations are structured such that there are long workout periods. And as Rosa said, and we've experienced, they're willing to pick up the phone and have a conversation with you about whatever those issues might be in service of the program, but also in service of the project. So you have to not be afraid to ask questions, and if you don't understand something, stop the proceedings until you do, and get the answers that you need, because, like I say, it's a long-term relationship.
I agree with everything they've said. I will add one more comment, that people who are trained in commercial lending, part of the 5 C's, 7 C's, whichever version you're looking at, is the character of your borrower. And so, as Dakota said, building a relationship, working with the person, we're looking for someone who has both, and that someone could be the individuals or the people running the business. We're looking for those who have both the ability and the willingness to repay. So someone said to me a few years back that that a person had the financial strength to repay the loan, but had this mentality that, oh, if it doesn't work out, I'll just walk away with it and they can have the collateral back or whatever the situation. Oh, they won't take it away, so I'll just walk away if it doesn't work out. We're trying to ascertain the willingness to repay as much as anything. And so if we come across that kind of attitude, we won't be motivated to close the deal. So we want to partner with you, and we want you to trust us as much as we come to trust you. Okay?
Thanks. Excuse me. So our next slide is about waiver of immunity issues. I think we've already discussed that. Would anybody like us to talk about it more? We can move on, right, Ken? Okay.
Shane, I think, has a question.
Oh, I'm sorry.
Just real quickly, the Citizen Potawatomi Nation has come up with a number of limited waiver of tribal sovereignty. So if anyone out there would like to look at what that looks like, we have some attorneys that went through and crafted something. We'd be happy to share that. Just shoot me an email and we can send those over to you.
Yeah.
Real quick, Andy. Oh, sorry. So I'm Wayne Duchesneau again. I'm interested to hear more about, you said the chief's authority to waive for new market tax credit projects. I'm assuming that within that is a limit to the size of the projects, or can you talk just a little bit more about that?
Sure. And actually, to Shane's point, I'm happy to share the piece of legislation that was passed through the Tribal Council too. I don't have it on me, but we can pull it up in Legistar and make sure you have it. So the transactions, we tried to leave some flexibility in the law that was passed through council so that we didn't get pinched with a large project versus a small project or some sort of transaction size. The chief has some limits on his authority that are beyond what I currently have available to draw on, so I'll have to look up what some of that was. But we really left this fairly general with the understanding that it had to go through, to close a transaction, our business board of directors was going to have to give a thumbs up to close a transaction. And along the way, we were going to need a waiver of sovereign immunity to make guarantees enforceable and such. So that was the size of those obligations was never going to be quite as significant, perhaps, as the business would be responsible for. It was really a smaller piece of it. It didn't pose problems at the time.
So the CDE is asked to give indemnifications to the investor that the CDE will remain in business and that the CDE will not move too much money either from the project to the CDE or from the CDE to the investment fund so that a recapture is caused. And those issues are what the CDE is asked to indemnify for. And I would imagine those indemnifications are what you did the waiver of sovereign immunity for. Yeah. So Ben, would you like to talk about experiences you all have had in underwriting this from the investor perspective?
Sure. So one of the issues that we talk about on this slide is the CDE, right? So if we look to the CDE, and honestly, a native CDE versus any other CDE to us really doesn't look all that different. We're looking at what your capabilities are. Do you have the ability to stay in business? Do you have the financial strength? Do you have the support of your tribe to do what needs to be done to make sure that you maintain your compliance? And that's what we're looking for. We're trying to find ways that the CDE itself we know will maintain compliance. And that can take the forms of some of the similar things that is in your application. What's your management capabilities? What are your abilities to redeploy? What's your pipeline look like? What does your service area look like? Because that can impact what your pipeline looks like. Those kinds of things. So there's definitely some capacity there on the CDE type of it that we will look at and we want an understanding of. It could be as well that maybe you don't have a robust staff that has a lot of compliance and experience in those areas. Maybe you need to bring on a third party, to bring in a consultant, or bring in somebody else that can assist you with that along those lines. And that can be beneficial to you, and it can be beneficial to me as I'm doing the underwriting. It makes it a little easier because I've seen this entity before, and I know it's going to be done. So those kinds of considerations all work into what we look at when we're trying to partner with the CDE, because we view our CDEs as partners. And we want, again, we're in business together for at least 7 years, and we hope a lot longer. So we want to just understand that. And as CDEs get more and more sophisticated, and that CDE might have started as a new CDE to us, and they get more sophisticated and better, it just makes our process easier, and we have that relationship. So a lot of it is a relationship with our CDE partners and who you bring to the table.
So, Ben, when you look at particularly a tribal or CDE, does the size of the service area give you any concern, and particularly on redeployment issues?
It really depends. The service area can give you some concern, because if you're limited to this one county in one state or something along those lines, that can limit it. However, maybe that one county in that one state has a lot of need, and you can show that there's a robust pipeline associated with that. So that could be a mitigant to that. We also look at what's your mission as a CDE, and is your CDE's mission to invest in native lands? And that's great. And so that actually informs us of where your redeployment could be, and then we can look to that to say, based on that, if you have a state of Oklahoma, for example, there's more opportunity for redeployment within that, and we can still fulfill that mission when you do that, if you get into a redeployment scenario. And quite frankly, redeployment scenarios are fairly rare. We don't like to see them. No one does. The CDE doesn't, the project doesn't, because the project has failed for some reason. And then the CDE is left trying to look for a project, and you have that 12-month timeline to redeploy those funds if money comes back. And so that's what we're looking at. Do you have the ability within that 12-month timeline to redeploy into another project?
Andy?
I might offer a cautionary tale. Don't assume that defining your service area will make sense the first time that you think about it. Maybe pause before you hit send on that application and consider exactly what you're limiting yourself to. So we ran into a situation where we had initially filed our application with a service area that matched our tribal's jurisdictional area in northeastern Oklahoma. Well, that turns out when there's a financial meltdown, tends to limit the number of projects that you see that are actually accomplishable in your jurisdictional area. So we had to go back and amend that, and that was a bumpy process along the way, but we with some help from CDFI fund and with some projects in mind, we were able to do that. The smarter thing, the learning that we had at the end of that was that, well, we would have been better served to cast a wider net for our service area, make sure that we had the representation and such, and then target specific types of projects in native-focused projects, perhaps, especially in this context, rather than arbitrarily drawing that line pretty small. I think you need to be careful from a CDE perspective. You're right; those redeployments are not regular as far as sort of the industry is concerned, but that white knuckle moment of trying to find another project, you need to have some flexibility to find what those options are going to be. So just some thinking along the way and some learning from our own experience. We would do that differently now than we did when we applied the first time, for sure.
So let's talk about the decision-making process. Andy, you've touched on it a little bit, but let's talk about the CDE issues and the investor issues on tribal decision-making. So
I've had some conversations with some of you in the room about that. Most of our board of directors for businesses, for Cherokee Nation businesses, have transitioned into board members who are small business owners. They absolutely know the ins and outs of their small businesses, but they don't pretend to interact with more complex financing like this. They understand lending, they understand lines of credit, but tax credit financing is not something that they encounter on a regular basis. And so we had to recalibrate a little bit and think about how we talk about this, about the program, how we talk about who we're lending to, and why we would do that. So it really became more important for us to be able to tell a truthful but compelling story, and to understand this in context of meeting people where they are rather than trying to throw the alphabet soup at them. We actually kind of backed away from trying to explain quiliques and qualic Bs and such, and just really broke it down into pretty simple terms that we obviously had more background for, but we didn't want to put anybody's defensive screen up. That concern that Karen mentioned earlier is real. That you've all experienced that as well. That the suits are going to show up with something and talk around you, but not to you. And so we really had to be careful to not be the suits in that scenario. So we walked through projects, and we were able to tell stories about projects that we wanted permission from our board. We wanted their authorization to execute those projects. Even when we were just vetting things that never went all the way through, we really broke it down into telling them a compelling story about why this particular project or that one had a need that we could participate in, and that there was a benefit, and explain the benefit. That conversation we learned along the way can't necessarily happen quickly. I think it depends on your own organizational environment as to whether or not you've got that level of sort of snappy decision making. We didn't. And so the thing that we had to do was have that conversation, be prepared to have it several times to get people comfortable with whatever that transaction looked like. Like I said, we set the table with the limited waiver of sovereign immunity, getting that done early. We tried to let all of our stakeholders know when we had projects in the pipeline to look at what those were early on in the process, even if we knew most of those were going to fall away, and we would only wind up with a much smaller subset, just so we didn't get caught off guard.
So, Julia, when you do a project in Indian country, is the decision-making process something that you look at early, or is it of concern to you?
Not necessarily in terms of needing to do anything early. We've got 1 to 2 tribal members on our board, and we have a native CDFI subsidiary at MMCDC. So we're not new to lending in on reservations and such. But just as Andy said, I have to go back periodically and educate our board on how New Markets works and where the risk levels are. Economic risk, liability risk, the indemnities to our investors. The whole array is appropriate for any board, whether it's a native board or not, and for each transaction. We do discuss from both the risk perspective, is it a good loan? Is the borrower likely to succeed and be long-lasting? Not just able to repay, but are we setting up the business for sustainable enhancement, or are we setting them up to fail? That's part of the question our board looks at in any event. And who are the partners involved here if the loan provider is relevant to the transaction and likely to succeed with the borrower as well. And we look at those same factors with reservation deals, and we do look at, is the tribe or whatever tribal entity likely to approve the deal, and will it go forward? We financed a portion of the White Earth Tribal and Community College expansion, Phase 3 expansion last year, and we got so many different parties involved in that deal, from putting in the funding from the bank, of which we're a majority owner, and our native subsidiary, White Earth Investment Initiative, through the College Foundation, and getting MMCDC involved as well as our New Markets entities. But making sure that the college staff, who had had a lot of turnover and had a suspension on their college authority a few years prior, making sure that that all worked out and that their enrollment was increasing and the like. So we're trying to get to know the business, the people involved, the lenders involved, all the parties, to make sure it's going to work out for everyone involved, financially and business-wise.
Thank you. Ben, does U.S. have any different policies about project approval from tribal governing bodies? Is there anything unique that you look for there?
There really isn't anything unique that I look for there. It's more along the lines of, do you have a plan in place? Really, you know what you have to do to get the approvals you need to get. I don't know that. I can't know that. And so if you can demonstrate that you have those approvals, you have the ability to get there, you know what it's going to take to get from step A to step B, then that's usually sufficient. And it's usually enough to know that that's being worked on. Because when I start closing a transaction, the investor is generally one of the last pieces of the puzzle that falls into place. Usually the CDE has made the decision that they're going to invest in the project, and then we start looking around and trying to marry the investor to that project. And it doesn't always work that way, but a lot of times we're that last piece of the puzzle to fall in place. And even in that situation, there's deals that are more put together than others. And as long as you say, look, this is a lead time item for me, I need to get my approval to do this, and it's going to take X, Y, and Z to do it, everybody in the transaction's fine with it. We know from the very get-go that it's going to take some time. That's one of your lead time items. I know that you're working on it. And it doesn't concern me at that point, because I can't tell you what you need to go do, because you're the one that knows what needs to happen within your own government.
Thanks. Oops, sorry, skipped one. So now let's talk about how investors and outside CDEs get comfortable with community and cultural issues. Ben?
Sure, I'll start from the perspective of U.S. Bank CDC is an investor, obviously, in these new market tax credits. We also have our own allocation. And in a lot of respects, we don't look at the projects differently as an investor than we do as an allocatee. We want to know there's a community impact. I'm fortunate enough, I'm the guy in the suit, right, from the bank. However, I am fortunate enough to work for a company that has a double bottom line. We do have to bring financial results to our shareholders. That's part of what we have to do. And in order for me to continue to get a paycheck, I need to do that. However, I do have the added benefit of working on some really great projects that tell some really great stories. And that's what gets me excited to go to work in the morning. It's not the paycheck. It's not working for the bank by any stretch of the imagination. It's knowing that I'm making a difference in these communities. And so high impact projects are what really help us know that we're advancing where we want to go as a bank and where we want to go with our own new markets allocation, and looking at it in that respect. I'm also fortunate enough to work for a bank, and specifically our subsidiary, the CDC. We have an extreme focus right now on diversity, equity, and inclusion. We're trying to find ways that we can focus our energies and focus our capital into underserved communities, and how we can actually advance agendas related around diversity, equity, and inclusion. And it's something that requires a little additional thought, but it's also something that is really beneficial and gets my juices flowing from the standpoint that I know I'm making an impact. I know this project is going to be there. And I think that's important from the investor perspective, from the CDE perspective, and certainly it's important to the project level.
Thank you. Juliet?
Oh, well, I agree.
Okay.
You know, some of the tribes do have elections every other year. Many of them do, I think. And We've run into a situation now and then where the decision makers changed over during the time of trying to put a project together, and we had one fall apart as a result. Most of the time that doesn't happen, but we're looking for the borrower community to key us in if there's a potential issue there as we get to know the proposed project and get to know the community and such. So we're not looking to have someone deliver a project to us and get it closed. We're looking to get to know the borrower and the nuances and things like that so that we're familiar with you. And I've learned over the years that banks tend to visit their projects once a year, sometimes less. MMCDC visits the vast majority of our borrowers twice a year. We're really looking to partner with you and see if there are additional financing needs you have along the way. So it's a relationship we're looking to build. And so these things are all something that we want to become familiar with as part of that process and getting familiar with our borrowers.
Thank you. So we'd like to talk about some projects, and I think Dakota mentioned this one earlier, and one that he was particularly proud of and that made a real difference for the Chickasaw Nation. I think both,
Yep.
Andy and US were involved in this,
Sure.
right? And would you like to talk about the project, or should we have Dakota do it?
Well, we're going to loop Dakota into this whether he likes it or not. So that's going to happen. Just go ahead and give him a mic. We were the CDE on this particular project, and as was mentioned earlier, we had to get a change in our service area to make that happen. We were running up against some deadlines, and really, there was a lot of there were a lot of things that had to be moved and done to get this project, from our perspective, to get this project done. We learned about this one from a relationship that we had with folks at the Chickasaw Nation. And Dakota explained this to me early on, that repurposing this hulk of a hospital into something useful was one of those ideas that was important but not urgent, right? All of the urgent needs kept jumping it on the list of projects. There's always a place where your capital is going to get soaked up, and the tribe had other concerns at the time that kept jumping it on the list. But it was always simmering there in the background that we'd like to do this project. Well, for us, we had a relationship with Chickasaw Nation, so we really started. The process was easier for us to get to know them and to get to know the project, because we already had lots of other interactions. So there was kind of less of that concern. Is this somebody we'd like to be in business with? Yeah, this is somebody we're already very comfortable being in business with. The story is really what gets compelling about all of these projects. Ben said it, Julie said it. I mean, this is a giant facility, and we toured it with Dakota and some of his team before the renovation started, and it looked like they had flipped the switch one day and stopped having hospital services there. There were still things on the whiteboard. There's still some little bits and pieces around. It just ceased to be a hospital one day when they opened their newer facility, which is also a gorgeous, really effective facility. So, we could see that it really was going to take a lot of vision and a lot of fortitude to get this project done, and Dakota and his team were absolutely committed to getting that done. We really had no question but that they could pull it off. The business acumen to make that happen. So, we felt pretty fortunate to have that quality of a project, given that we also had some constraints and some deadlines that were coming as well. That was really a godsend to find that kind of a quality borrower and a quality project. The story of what happens next, all of the hoops that Dakota mentioned earlier having to jump through, all of that is just part of the battle scars of getting these projects done. They've all got their own little twist on something unique that has to happen as a result of them. But the end result, there's a beautiful, functional tribal services center that sees Dakota. I didn't have traffic numbers in front of me, but there's a large staff that works there now. There is a central place for tribal services for you to access those instead of having to go to different offices scattered around in Ada and the surrounding area. You can go to one place. Please jump in.
This facility houses 165 employees. It serves as the main center for Chickasaw Institute, which provides workforce development for technical trades such as heating and air conditioning, electrical, computer technologies. It also serves as the focal point of our career development initiative, which takes Chickasaws that were formerly prosecuted and are troubled by finding work back in our area. And so we give them employment. We give them professional attire. All of that's based right here. We also provide healthy food opportunities. We've branded our own small cafe in there that lends itself to ancestral health initiatives. You can also access all the benefits that are provided to 18,000 covered lives that are based upon 10,000 of our employees that the tribal government employs. I'm just walking through there. It has its own small health facility in the back too, and more than anything, it has truly been catalytic for that area of Ada, Oklahoma. What was once dormant, cold, and it was literally, as Andy stated, they flipped the lights off and moved to the Chickasaw Nation Medical Center, so that the new one, so that we could have continuity of care. Because the demand didn't stop just because we were in the process of moving. So they literally picked up and moved all within like a 48-hour window. And they had all new FF&E and a new 380,000 square foot facility that was also financed 60% with bonds. So there was need to service that debt versus redeploying capital in this particular facility. But now it is brought along that portion of Ada, Oklahoma, and I'm just happy to highlight it. And
Can you talk a little bit about the catalytic effect in
Mhm.
addition to the building and the activities going on in the building? What are the catalytic effects surrounding the building?
Yes, ma'am. So, in regards to our partnership with the city of Ada, knowing that we had this facility coming, we also put in and expanded the roadway, so allowed for other economic development opportunities, and we did that through roads program that's also managed by the Chickasaw Nation. Moreover, having success from this project allowed us to, within a mile as the crow flies, restore that dilapidated bowling alley that was fixing to fall in on a major corridor in this severely distressed census tract. We also expanded the roadway there. So now you have, before, you had Walmart. Now you've had 3 new grocers enter the marketplace, Aldi, a local grocer, and then 10 Box. You've also, Chick-fil-A's come to the area. We've had another hotel come to the area. So I know that the Chickasaw Nation obviously catalyzes a lot of this, but this is the core and drives the employment creation. We've increased employment opportunities all surrounding this facility by about 8% per annum since we've introduced this facility, because of our focus on workforce development that's derived from this particular area. It also falls in line with the beautification of a low-income community too. Across the road now is a Hobby Lobby, and I would have never dreamed a Hobby Lobby would find its way to Ada, Oklahoma. And because of the roadway, because of the economic velocity with these higher paying jobs, it has truly been catalytic. We started, because of what we learned here, we also did a complete greenfield development out on the south side of town too, that's really spurred economic growth. And so if you visit Ada, you'll see 3 beautiful facilities that's leveraged the New Markets Tax Credit Program, all of which has materially impacted the economic base and will do so for generations. So this is catalytic in terms of intellectual capital. It was catalytic in terms of other true economic development, beautification, but more importantly, we're affecting lives daily out of that facility. And I can attest to it because I was there literally, what is today? Thursday? I was there yesterday from 11 to 12. Yeah, and it's beautiful.
Thank you very much, and congratulations, Dakota.
I need to thank Andy and U.S. Bank because they held our hands along the way, and I'm being literal in that we didn't know anything. So thank you for your patience.
Julia.
Okay, Zacate was a local camp-based business that was started and run mainly by Kathy Goodwin and her husband and the board on the White Earth Reservation. It wasn't on trust land and it wasn't a tribal deal, but we had some similar issues, but lesser so. And this came out of our very first small project fund with U.S. Bank. But we were able to provide $250,000 financing for this business to help them add several camps during the year. And it was really based on continuing the Ojibwe language that so many of the people, the kids who were sent off to camps in their youth and kept away from learning the language and the traditions and such as they were growing up. Kathy was trying to reincorporate learning those traditions into the youth and restart them. And there aren't too many people on the White Earth Reservation who know the language, and they're trying to get that in at the college level and at the youth level and throughout. So besides the culture and the traditions, just life skills, teaching the kids that if you work a little bit, you get something from it. And the crops shown here were a big part of that. They would camp out in tents for several days. They would tend to the crops during the process and come back to them repeatedly during the year and harvest them and sell them and on and on. So it was a multifaceted process that they tried to teach there. And one of those feel-good types of things that created just a few jobs, but more on the impact side for the community. And this is one of those sad stories, too. A couple of years after we financed this, it was such an exciting time, but then she had a heart attack and died, and the business just had a lot of trouble continuing on without her as the driving force. So we helped them on our grant side to get some HUD funding, HUD or something, HHS maybe, to pay off the debt. And so they were able to continue the work on a smaller scale. So that gave rise to one of the redeployment issues. We also had financed another small business with a 504, an SBA 504, but the whole thing during construction. Then we had to redeploy the construction piece once the SBA came in. So we paired that with the Zacate loan, and we financed a small business in southern Minnesota.
I think that's a great example of transparency and working it out with your CDE. And this at 250,000 is a tiny new markets project with big impacts. So let's go from the micro to the macro and talk about $69 million and what folks I think in the new markets world would probably refer to as a club deal, because it's more than one CDE and complicated structure. Andy, you want to talk about this one?
Happy to for our little part of this. So one of the features of the New Markets program was that you could deploy outside of your service area a certain percentage. Rosa probably has, I'm sorry?
15. Yeah.
15%, but I was going to say she probably has some opinions about this. But in any case, we utilized a portion of our allocation to join the club and participate in this. Is there anybody here from Alaska? I didn't check earlier. No? All right, well, GCI was building this. GCI is a large telecom provider in Alaska, and they were building out a terrestrial network to serve the communities in western Alaska, kind of think up the western coast of Alaska. And that was to enhance all sorts of different services, government services, education, telemedicine, lots of things that you can do with high-speed broadband, but which don't work all that well with satellites. That if anybody's got satellite internet service, it can be painfully slow and unreliable depending on what's going on with in the environment around you. So the idea here was that some high-speed service and some redundancy would serve these communities well, especially if we could get it to hub communities that then serve as a central point for outlying villages. For us, the selling point was that these villages are heavily populated with Alaskan natives. So we had a story to tell about helping native villages out, and then the economy in those places that we could benefit folks with educational opportunities and such. It really was a compelling story and something that we could get our arms around, that by doing a network, we could benefit a wider array of people than we could if we just did a pinpoint in one particular community. Because as you well know, a lot of those communities are not connected by roads. They can be fairly isolated. So this was a good project, and it took a lot of coordination from a lot of different partners to make that. We went along for the ride and learned a lot along the way.
And Andy, if you don't mind me saying so, these multi-CDE and multi-year deals can be really difficult to do and quite cumbersome. And the deals that were this complex that I've been involved in, having U.S. involved, was really helpful. Mm-hmm. Each investor, everybody has their own corporate culture, and each investor has a personality and strengths and weaknesses. And one of U.S.'s great strengths is being a closing machine.
We try.
Well, the efficiencies with which you guys run closings makes it a lot less expensive to put all these parties together and make a deal work.
At one point, we had conference calls with Alaska time zone, somebody in Los Angeles. We didn't have anybody in Mountain Time. We tried to get somebody just to make it a clean sweep. We covered everything from Eastern Time all the way out to local time in Anchorage. So just getting the conference calls put together was a real feat.
And when you hang up the conference calls on one of these, if you stay on until all the beeps are done, it's usually like 35, 40 people on the call.
Yeah, this was a large project, a lot of CDEs, and we do have the ability, and that's one of the things we're good at is trying to close some of these larger deals. We do try to. We have people that are dedicated, like myself, to closing deals. It's what I do. And but the project, again, going back to this is a great project. You can see we brought our own allocation to this deal as well. It's a great project if you can imagine these rural communities that are serviced by plane, if at all, and depending on the weather. And so it can be really isolated areas, and this brought a lot of technology. And quite frankly, this isn't our only investment in GCI and their network, and they've expanded their network and they've gone even further with it since this time. And this is a major project, but it brought a lot of good to very remote and isolated communities. If you think about it, you can't go see the doctor real easy in a real isolated community, but if you have that broadband network, you can get on a video screen with your doctor 1,000 miles away or however far it is, and they can run through the checks and they can help you. Whereas that would not be possible over the phone. It just they need to be able to see you. They need to be able to do those things. So again, a very impactful project that it's outside the box. Who'd have thought that that a broadband network would be a New Markets project at the end of the day? If you don't, you just have to think creatively. It goes back to what types of projects can we do. We can do a lot of good and a lot of different projects within these communities because of the flexibility of the New Markets financing and the creativity of the people that are involved in the program to come up with ways to be innovative and to do things. It goes back to the small loan funds as well. How do we get that money down into small loan funds? We've got to be innovative. We've got to do those sorts of things that are a little maybe outside the box that normal financing just wouldn't do. And that's where this money and this financing is so impactful.
Bill, do we have time for a quick look at a couple more?
I know we're supposed to start at 4 o'clock with retreat in the next 10
Okay. So if I can, I'll just flip some slides. And this is one of Julia's project, and it's a multi-building project, which makes it also an interesting example for New Markets. If you're familiar with some of the other tax credit programs, doing multiple buildings can be challenging, but it's something that you certainly can do with New Markets.
Let me just add one quick comment on this. White Earth owns their casino directly at the tribal level. So to have the tribe as our borrower, because they have a predominant ownership of gaming, they were ineligible. We use the portion of business rule because they have financial statements for just the New Spirit Center on its own. We were able to look at that as if it were legally organized as its own entity and do the New Markets for this business by itself.
And that's another important flexibility for New Markets tax credits that's quite unusual. And the health center expansion, this is one that accomplishes things that I know are pretty important for lots of Native communities, because the dental visits were the number one reason for non-emergency visits to the emergency room, and we're taking up a whole lot of emergency room capacity. So this clinic solved that problem by providing dental services.
Yeah,
Okay.
This was a fun one. It made a lot of sense. It had a great story to tell. It was eye-opening when they showed us the data on the visits to the ER. Folks show up at the ER with tooth pain. They're not in threat of life and limb, but it hurts, and so they would show up to the emergency room. They weren't getting regular care, and so this added an enormous amount of capacity. They had 4 chairs prior to this. We added an additional 15 as a part of this project. Those 4 chairs would fill up between when they would open the phone lines at 8 a.m. and by 10 a.m. on the first day of the month, all of their slots were full. So this added a great deal of capacity. You can see that bottom number was 26,000, almost 27,000 dental visits that were accomplished over the course of, that was a 2016 number. I'll have to get my 2017 number handy. But that's a huge patient load. They're busy all the time. It tells you that there's probably still some more unmet demand in the community. But great project. And an experienced borrower. This was their second New Markets transaction. So that helped as well. They had some established relationships with U.S. Bank. They had an established relationship with counsel. We were the new player in that, but got to know them, and that was a good project to get done. It was a lot of fun.
So I want to thank our panelists and thank the Federal Reserve and the CDFI Fund for allowing me to spend this day with you, which I have enjoyed very much. Thank
Can I
you.
add one more point?
Please.
We have a couple of our USDA friends in the audience here. I wanted to mention, Joel mentioned earlier that we had used B&I guarantee on a project up in Red Lake that recently closed. We've used USDA B&I guarantees on New Markets deals in the past with and without native deals with US Bank, and they, in the past, we could not flow the guarantee through the New Market structure, and USDA has been working on that for several years, trying to provide that capability. And they had some new regs passed about 2 years ago, and the biggest improvement out of that was that we can use the New Markets equity to satisfy the USDA required equity from the borrower, the 20% equity requirement. And they've recently done another technical correction to those that provides another improvement in how we can use that. So that is another tool to help provide the strength to the borrower to satisfy the bank's needs to get a deal done at times.
Thank you very much. Thank you all.